Okay, so the session is being recorded. This is the supply and demand zone trading strategy. I'm going to use a 4EMA, all right? So in that 4EMA, I'll be able to go to settings. In the first one, I'll come here and I'll put the style to be 12. I'll use 36. I'll use 200 exponential moving average, and I'm going to use 633 exponential moving average. The 12 is to measure the volatility. It's more or less like the trend line of how price is moving in a dynamic manner. The 36, I use it for a retracement zone. If price is trending in one particular direction, I want to use the 36 as an area for me for price to go back into before I make a trading decision in the particular trend direction. So this is a trend trading strategy as well. Using this EMA is we're trying to capture the trend. The third one is 200, which measures the particular deviation away from the buyer's control region and the seller's control region. I'll explain that. And the third one is the 63, which I use to find the overbought or oversold level. So I like to put my 12 as blue, all right? My 36, in this case, I like it to be orange, all right? I like it to be orange. I like a little bit of thickness to come into play in them so that I can see things conspicuously. I like my 200 to be black because I've got a white background, and I would like my 633 to be orange, sorry, a yellow as well. Then I'm going to click OK, all right, and make sure that I bolden up every part of it. So as you can understand, I use this for a trend trading strategy for me to know which direction is a trend. So me looking at this, if price shows me that we are in a trend, obviously, say for example, I wouldn't have known if we're going to start to trend down, but this is a 4-hour chart. I like trend line on 4-hour chart such that when that trend line is broken, I know that that is the beginning of a new trend that can go, that can give us a trending trading decision or direction. So in that case, if I put a trend line on my 4-hour chart like this, once price break, all right, what I'm waiting for is retracement back to 36, and I'm good. That will be the place whereby I want to see the break for me to be sure that we are going down. So number one, the break occurred. Number two, retracement back to 36 EMA, and at 36 EMA, I'll be looking for rejection candle for me to take the trade. But what I then do again is I can use an Ike and Nashi candle, all right? And what I do with the Ike and Nashi candle is to smoothen up the buy and sell direction. So what I'll then do is once price retraces back to 36, so we've got the break of a trend line, all right? And I'll be looking for possibility like this. I'll be looking for price. I want to do the beginning of the move, right, as my one to the all right, let me delete this. Bear me a second. So I've got a 1, 2, 3. It's called the ABC here. All right. I wish I've got, yeah, we can use the ABC and represent us, right? So I have normally I'll say my 1 to 2 and 2 to 3 line, okay? So this would have been my 2 to 3 line, all right? And I want to see the break of that 2 to 3 line. I will explain it again. Let me delete it. So I'll annotate it. So this is going to be from 1, the beginning of the move, to 2, where the move ends, retracement back to 36 EMA, okay? Retracement back to 36 EMA, all right? And after such retracement back to 36 EMA, what I'm looking for, if I'm using my Ike and Nashi candle, is I want to see price move back to 36 EMA, and I want to see the break of that trend that moves to 36 EMA. So you can agree with me that all this is going to be giving me a reason to be patient in the trade, all right? And such that the direction that I want to go, if the trend breaks down, you can see that is a seller. I want to see a red candle popping in, all right, to show me that the sellers have now taken back control. They are now in control. After that red candle, which is going to be the red candle that will break the 2 to 3 line, okay? So let me annotate this as 1. So for the people who are asking for the EMA strategy, this is how I employ it in a trend trading and this is going to be my 2 to 3. All right. So if you now understand that from 1 to 2, 1 to 2 and 2 to 3, the next thing I want to see is I want to see the first red candle that will break the 2 to 3 line. So this is my 2 to 3 line. So this is the first red candle that breaks it, irrespective of whatever time frame that you are using. It's okay. So this is the candle that is going to be what? So I've shown you my setup, my 1 to 3, 1 to 2, 2 to 3, and the setup will be 2 to 3 line break. All right. So I want to see the trend line of 2 to 3 broken. All right. Once I see that with a red candle, all right, because I want to be going in the direction of the trend break, okay, with a red candle, the next thing that I'm going to wait for is the candle that now takes the low of this red candle will be the red candle. This red candle is my trigger. All right. Let me do the setup. So this is the setup, 1 to 2, 2 to 3 after the break of the trend line, all right, 4-hour trend line or 5-minute trend line. But the longer the time frame, the better. All right, so retracement back to 36, right? That is my trigger. I want to see that price retrace back to 36. All right, and when price retraces back to 36, then I'm seeing a red candle that breaks the 2 to 3 line. All right, that's my trigger. My execution, however, now is going to be any candle. I'll check the low of this candle. The low of this candle being, 1 second. The low of this candle will be 0.70335. All right, so 0.70335. That is my execution. So I want to enter the trade when I have any price 1 pip just below the low of this candle. All right, so that will be my entry price. Okay, so now I know that my entry is at 0.7032. Let me delete that. 0.7032. That will be my entry. 0.7032. That will be my entry. So you can see the rules as it's playing out. All right. So that trade, if I check the low of the next candle, which is 0.0733 again, and the low of this one, 0.0733, I did not get any entry on this 2 candle. I didn't get my entry until what? 0.7031 until the 3rd candle. All right, until the 3rd candle. So this is the candle that produced my entry after a couple of hours, right? And my stop will always be above the 36 EMA. So if I look at a candle that gives me the test of the 36 EMA, right? I want my stop to always be above the 36 EMA. All right, so my stop will always be above the 36 EMA, which is somewhere above there, say for example. But in the best case scenario, right, if you are conservative and you are using a very small lot, then your stop can be above 1. All right, your stop can be above 1. Ideally, you want your stop to be above 3 to have a very small tight stop. But when you are using this on a smaller time frame, like 5 minutes, you can put your stop above 1 after the trend line break. So trend line break, rule number 1. Rule 1 for EMA strategy. Rule 1 for EMA trend strategy. So this is a trend trading strategy, okay? Strategy 1. Break of a trend line, okay? to draw your 1 to 2, then 2 to 3 setup. 3, break of 2 to 3 as trigger. All right. 4, execute 1 pip below the break of 2 to 3. All right. So that is a complete EMA strategy. Stops now. Stop number 5. That will now be your management stop above the 36 EMA for a low risk tight stop, or for a much more conservative, that would be an aggressive, for a low risk aggressive tight stop 1. For a conservative stop, but a more conservative stop stop above 1. Okay, right. And then your target now, your targets will now be whatever your stop is. Okay, so say in this case, let's look at it. If your stop is going to be, this is our entry, which we can predetermine. We know that we have about 37 pip stop above the eye of this. Okay, 32 pip, you can add 5 pips to it. That'll be 37 pips. If it's a higher time frame, you tend to get up to about 30 pips upward. All right. And then obviously, if that is 30 pips, your first targets, all right, you can enter trade position with this, will be 1 to 1 at another 30 pips or 35 pips or so, right? Let me do this. Will be 1 to 1 from here to here. Come on. I don't need this. All right. So that's more than 30 pips from here. Say about 32, say 37 pips. That'll be first stop. First target. Second target, however, will be times 2 of that, which will be 2 to 1. So you want to have 74 pips, another 37 pips down there. Okay. And then you can have a third target as well at 3 to 1. So that will give you a 3 to 1 trading strategy setup, and another 37 pips for the third target in a trending market. So that's a trending strategy scenario. Okay. So all you're looking for, break of a trend line, retracement back to 36 EMA. So all this is going to be giving you patience to be able to stay in the market and look for available setup. So that would have been the kind of trading opportunity that you'll be looking at. And each and every retracement back to 36 EMA, because we have a trending market situation, you can see the blue out cross down. You want to see that if you are in a sell scenario, the blue has crossed as well. Okay. And then in as much as the blue still remain below the 36, the trade is still valid until the blue start to break back above the 36. And this will be where you will now be considering, if you still have more position in the market, to start taking off a position when the blue cross above the 36. All right. So yeah, so the next available one would have been another 4-hour trend break. Okay. So what we'll be looking for now will be possibility of this. So we have a 4-hour trend break now. Okay. So after that 4-hour trend break, we are now looking for, we need to wait for retracement back to 36 EMA. Okay, we need to wait for a retracement back to 36 EMA, which will now start to give us our 1 to 2, 2 to 3 in this manner. Say for example, and so the next one would have been, we are looking for a trade that will be pushing price in this manner. We are looking for 1 to 2, and we'll be looking for 2 to 3. Okay, retracement back to 36 EMA, which we haven't get. Okay, and then we now be looking for the break of the trend line that gives us that 2 to 3 to take price back up. All right, so this is an entire mechanical process that you have to wait for. So if you haven't seen the setup complete, there's no need to rush into any trade. Just wait for your setup, because once your setup is complete, which means you have your 0 to 1, 1 to 2, right, back to 36 EMA. And at that 36 EMA, your first trade now in this case will be a green candle, because the retracement will be a red candle down, will be that green candle that will break this 2 to 3 line. You want to see that 2 to 3 trend line break to give you the sense of things have started to come down now. So that's how you use your trend line in a much more sensible manner. All right, so that is just for the EMA. All right, so but I know a lot of people that are in here today that don't understand the EMA strategy. I hope that helps. But yeah, remember, we want to look into supply and demand. All right, and then that's what we are doing today. But yeah, I just have to diverge quickly so that you can have a bit of an understanding of what I'll be looking at using using the EMA alongside. In an uptrend will be one pip above the break. Exactly. So that you have a process and you have a rule-based process behind whatever you are doing. Okay. All right. So what we are now looking for now is this. You're welcome. So that's one strategy that I've given to you in full that you can use on a trending market. So looking at this, right, you see it on the screen. Blue is 12 EMA, okay. 36 is orange, and black is gonna be the 200 EMA, and 63 is for the yellow. All right. All right. So looking at this chart, you'll be able to agree with me that if I ask you now, the first thing that I want to ask you is what is the trend on this chart? What is the trend direction? You're welcome, Bumi. If I ask you what is the trend direction, I've got 7 people in the room. I need 7 answers, either up or down. I just want to see, and I want to know the reason why you said it is up and the reason why you said, or why you said it is down. Somebody says uptrend, okay? And why is it an uptrend on this chart? And by the way, this is the Aussie US dollar chart. So Pips and Candle says it's downtrend. Sirac, where are you from? How long have you been trading? And thanks for joining this session. Ilya says it's downtrend. I want to know the reason why, technical reason why you consider this to be a downtrend. So I've got 1, 2, 3 downtrend because there's a gap. We said there's a gap. Okay. What I'm gonna do is I'm going to delete some few things. Let me copy this one first of all. Okay. Below the 200 EMA, right? Okay. So let me delete some few things. So the main reason why I'm doing this is so that you will be able to do it when I'm not there, so that I'll, what was that? Give me a second. Below, I don't have a 50 EMA. I've got 1236, 200, and 633. So someone says below the 200 EMA, Og says uptrend. Okay. Because of lower lows, all right, pips and candles. Wumi, because there's a gap. Wumi, do you want to explain what you mean by there's a gap below the 200 EMA, below the 200 EMA? All right. Okay, no problems. I think the only answer that is wrong will be the let me see, is Sirac. Um, I don't know the reason why you said it's up, but you may have your own reason, which it's not a problem. You can then explain to us a little bit when you have time. All right, so you can see the blue, right, has crossed below the 36, okay? And since then, price has been moving down. We got a retracement back to 36, price moved back again, retracement back, price moved back, retracement back, price keeps moving back. And you can appreciate that initially we have this trend, okay, just before we have the break. So this uptrend was going on, and then suddenly we have the break of the trend and retracement back to the trend line 36 EMA, and price start to come down. So for now, you will be able to agree with me, 12 EMA cross, break of trend line, all right, break of a trend line, all right, 12 EMA cross below 36, 12 EMA cross below or above 36 EMA. Those are the qualities of a downtrend, okay? And price is still going down. But now, in the phase where we are, all right, you can see now that price is trying to target where? What is price doing? What is price doing? Where do you think price is going? The long wick downward towards the EMA. Which of the EMA? Which of the EMA? Targeting the 36 EMA. All right. So if price is targeting the 36 EMA, which direction is it going? All right. Hold on a second. I gotta pay a call. of the 36. Okay, so what I want to bring clearer to you now is this. Okay, we have a longer term downtrend. Okay, in the short term or in the near term, the price is trying to move up. Okay, and while the price is trying to move up, price will be looking for an area of what? Another area where we're going to encounter a sell-off. Okay, and that area is where we want to find on the chart, so that now a sell-off can be in the direction of the longer term trend. Short term, we're going to be moving up. We're going to be looking for price to continue to push up higher, right, until they find a place where it can start to look for a particular sell-off. All right, one of the target location will be a price coming back to 36 EMA. There's no need to fret about anything in as much as price hasn't started to go in as much as we haven't seen a serious cross above the 36 EMA for us to know that we've started to go up. So as this is pushing up, we are pushing up to go and find the stronger sellers in this market. Okay, so now for us to find those strong sellers in the market, we have to be looking for previous areas where they come into this market. Okay, and then that is the number one rule of engagement in supply and demand zone. You want to see how the price move away from a particular supply and demand zone. Okay, so the way that we're going to do that is by looking to the left hand side. All right, and we want to find a fresh level as well, where we have just seen price moving out of demand and supply zone. The level has to be a fresh level without previous retracement to it. In some cases, when we have previous retracement to it, it's just cutting out the amount of orders away from that particular location. All right. So what we're trying to do now is price is trying to move up. So our own job is to go and find that zone that can be an area of supply going forward. All right. So sorry, bear with me um with that. what we are trying to look into is looking for that area of supply where price has find supply lately. So we then move down to the daily time frame to go and see how that area where we can find that area where price start to drop down significantly. All right. When you look at where price is going to currently on this daily time frame, we can see that we have some serious sell-off that occurred previously that pushed price all the way down to here. Okay. And then looking to the left again, but the thing is, this area price has been there a couple of times. Price has been there a couple of times. So for us to find a better place, we have to continue to look to the left to see which area price hasn't been for some time, and we have some supply and demand going on in that zone. So as you can agree with me, we have some buyers pushing price up here, a little bit of a seller, indecisive, a little bit of indecisive, but with the buyers strength coming in at the same time, and then we start to see this sell-off coming in. All right. So in this place, you can see the fight between the buyers and the sellers clearly. So one of the locations that I might be looking for before the breakdown, this level here, if I put an horizontal line here, this level here where the price starts to break down, that is the an area where the supply starts to exceed the demand in this market. Okay, so what I want to do with that area is I want to box it up. All right, and this is on a daily time frame. I want to box it up to see that area. All right, and then the eye of this candle will be the barrier for me in this okay, so my stop is going to likely be above this eye here, and I want price to move back to this area, yeah, in one way or the other for me to start to see that sell-off. Okay, but going there, we have 200-day moving average along the line. Okay, and that 200-day moving average will be the area where the sellers will come in again to defend pushing price back down. So for us to get to this supply zone, there might be a difficult time for us to actually get to this area, right? Because this would have been a very most high probability area, but we have this coming in very quickly as well. The 200-day moving average, which can be another area for us to start to look for. So let's look at it on a 4-hour chart and see whether we have a different zone ahead of us. Okay. So looking forward, looking backward, we are hitting the 63 EMA zone, all right, on this particular chart, and hitting that is pushing price. It can be another area of resistance for price to start to come back down. Okay, price has just passed the 0.7 7,000 level, and that's a key psychological number where we can find retracement for price to start to come back down. All right, but if I continue to look to my left, right, all this area, just because price comes back here now, you can see that price has been there before. And in this same zone, price has been here before. Price has been in all this area before. So I want to look a little bit to the left side to see where price hasn't been, because the current price is here. But I'm now looking to the left side to see the place. If we look at, this is where the current price is, all this zone, price has been there before. All right, so I want to look to a fresh level, to a fresh zone where price hasn't been before. All right, so I'll continue to look to the left, and I can see a level over here, this place, this particular place here. All right, okay, that particular place, before we see this sell-off, all right, and price comes back to retest it again, that's another thing that would make me look for another area again to consider going forward. But yeah, that's another supply and demand zone right there. Okay, and this supply and demand zone, what is giving me is about, it's giving me about 20 pips and stop, for example. But I can see that price has come back to test where the supplies begins as well. So I'll look a little bit to the side again to see if I can get a fresh level where price hasn't been for a long time. So if you look at here, you can see the green and the red somewhere here. All right. And you can see the drop. How did the price move away from the location? You can see how the first question is, how did the price move away from the supply and demand zone? So if this is supply and demand zone, how did the price move away from it? You can see this significant sell-off. All right. So that qualifies for a very good level, for a very good zone, right? And then that particular zone will be one zone that we'll be checking out. And I will then mind to have a sell entry in this zone. Okay. I wouldn't mind to have a sell entry in this zone. Okay. And if I'm having a sell entry in this zone, I know that my stop, that is key to me, will be how many pips. I want my stop to just be above here, but there will be other things that I will show you that I'll be considering for my stop. That'll be about 13 pip stop, and then price C has a very long way to even go there. Price C have about 3 pips to get there. So this will be one area that I'll be considering for a sell-off, all right? Because previously the way price moved away from it, it was in a very dynamic you can see a very strong price movement away from that zone. So that zone will be a key zone for me to look for a short opportunity. Okay. Right. So that will be one place that I'll be considering to sell. The Aussie dollar, my entry will be between 0.7091 and 0.7103 for a sell entry. Okay. I want my stop to be somewhere above here. And for me to choose a wide stop now, I can go to a 1 hour chart to go and look for what the X-ray of that zone looks like, to see the kind of structures that's coming up in that zone on this 1 hour chart. So what I'm basically looking for on the 1 hour is to see how price move down. We come back to it above here. That's where I'm looking to be my stop. But for me to have a much more conservative stop, I can look into another area. You can see the way price drops down there and retrace back up a little bit before moving down. So I can look into this area. Delete that. I can look into this area, right, for my stop, which is 0.7116 level. All right, so I will be considering that area to have a much more conservative stop, so that the order of my trade can be high. The reason why we are considering all this is to find a high probability setup on the charts. All right, and that zone with my stop above there will be one of the high probability zone that I'm going to be looking into to trade the Aussie going into the new week for a sell-off. All right. So that's one zone. You can see we find a couple of zones, the zone over here and then this zone over here. But I'll prefer to take how far away. I'll prefer to take the furthest zone, because this has shown me how did price move away from the supply and demand zone, how far away has price moved away from it as well. You can see we haven't come back to this zone since since around April this year. Okay, so what this is giving me is going to be giving me a fresh level. All right, it's going to be giving me a very good zone as well with my stop just above there. All right, and I'm going to be looking for at least, what is my target going to be? That's about 26 pip stop. All right, and I'm going to be looking for a target that is going to be possibly at least 5-1. So I want to see whether I can get a 5-1 target here. Okay, I want to see whether I can get a 5-1 target here. And what I want to do is, if my stop is 20 pips, okay, my 5-1 target will be 20 pips in 5 places. So that will be about, I'll be looking for 100 pips now. With the 20, that will be exactly 120 pips. So I'll be looking for 120 pips, and I want price to come back down to zones like this. Okay, so if I can get a 1 to 5, if I can get a 1 to 5 risk and reward scenario, or risk and reward ratio, then I know that I don't really need the 1 to 5 exactly, but once I can get 2 to 1 or 3 to 1 out of the trade, I know that then I'm going to be much more profitable, and I'll be profitable in the long run, looking at things from that perspective. So I'm not going to wait to take the entire 1 to 5. I still want to take some few things out of the table before I get that 1 to 5. But I want to see that there's a possibility for me to get 1 to 5 trade. So how do I do that? So when you look at the place where the price drops down to, so for us, this is supply zone, right? Okay. And in this supply zone, we do not have any demand that pushes price back up until that will be another key area for us where we can see demand coming back into this market. All right. As prices dropping down. So going back to where we are, you can see over here we have a demand zone. This slight place, the way price push up higher above it. What we haven't done is this. I want to mark up this area clearly. Right. So this is the old range that we want price to comes down to. So we expect that if price goes up higher to this level, all right, then we want to see price coming down slightly like that, all right. Then you can start to employ your other little things that you've learned and say to yourself, you can see a trend line coming up like this, okay. The first test, the second test, all right. And then obviously, if price goes up like that, would price give us that 5-to-1 risk ratio if price is coming back to this trend line? Because obviously, this trend line will be another key location where price can stop. So we can easily see clearly that should in case we run up, let's assume we run up, okay? For price to start to come down, the next place where price is going to stop will be this trend line, momentarily or temporarily, right? Before we start to see price going up, should in case this price want to go up. But we cannot afford to forget, right? We cannot afford to forget where that are 36 EMA on weeklies, okay? So having done all this, let's go back to weekly quickly. All right. You can see that our stop is slightly above the 36 EMA on weekly, okay? Our trade location, our trade entry is somewhere here. This is where our trade is going to be, somewhere here, which is just around that 36 EMA. That would definitely increase the odd of where our position is going to be, and that corresponds to an area of supply, and that corresponds to a previous area of supply as well for us. So you can see how everything line up together and how the order of our trade is going to be significantly increased if we take a position, if we take a sell position around there. So our sell position is coming in at 36 EMA bounce, right? You can agree with me. And then obviously it's not just coming in at that 60 EMA bounce alone, it's coming in at the supply zone that is predetermined on that hourly chart. So that is the place that I'm going to be looking to sell the Aussie going into the new week. We've got a price level at 0.7091. We're going to monitor this trade to 0.710. and our stop is going to be around 71.16. So if you want to put a pending order right now, I will employ you to do so based on those numbers. So I've analyzed the Aussie. Now I'm going to move very fast to analyze other pair. Now that you know what I'll be looking at and how I'm going to be looking at what I'm going to be looking at. So the number 3 rule is this. Number 3 rule. So how did price move away from that particular location? You can see how well price move away from the location so swiftly on that 1 hour chart. Let's go back to it. This region, all right. So that qualifies for at least a very high quality trade. The level has to be a fresh level. It's also a fresh level. That's number 2. Number 3, can somebody remind me rule number 3? Right. So that's number 3, and that we're gonna investigate now, and that will this is gonna be our checklist for finding our trade setup going forward. That's number 3. So execution, you know your execution is between 0.7091 and 0.7103. That's your execution. Right? And then you know where your management is, which is above there, 0.7116, and this is a 5-to-1 risk-reward ratio. So you'll find a 5-to-1 trade on Aussie, and obviously that's a high probability trade right there. Number 4, to increase the odds of success, we have to check the US dollar correlation. So if our trade is going to be successful, the US dollar must be rising by the time we get to this location. So the DXY must be rising by the time we get to this location. That would be another thing that we're going to consider finally to enter our trade. Price can move away with either a gap, that's a good 3/1. Price can move away gradually. Let's see. Price can struggle to move away from that zone. Struggling. So the best one is either a gap or price moving away gradually or swiftly from that particular location that we are considering, which is this place. Okay. So, and it's also a fresh level because we haven't been there in a very long time since what? We haven't been there since April this year. We haven't been there since April this year. So it's a fresh level. We haven't tested it again over and over again. So we are waiting for the bank orders, because what happened is this. For you to have a range extension, consider this. Over here, you can see this little range, right? You can see this little range, okay? This little range here. For you to have a range extension, right, you need to have other time frame traders or other time frame sellers that comes into this market. The other time frame sellers are going to be those big banks. Their orders are going to be always usually very big, huge orders. And you can see there's no more buying in this scenario. That's why we have this huge sell orders that push price all the way down. All right. And those are the little senses behind the trading scenario. So the next thing that we're going to consider again now is, if you now have a couple of charts that you want to look into, start bringing them forward. In the meantime, I'll be looking at all the dollar pairs. All right, so let's look at Euro USD. So, and I'm going to go to weekly again quickly, so that we have a overview of what price is doing on the weekly. All right, you can see clearly, you can see very clearly that if I ask you what is the trend on this particular pair on this weekly chart, what is the trend? Does anybody know what the trend is? Anyone? Where is the blue EMA? Where is the 200 EMA? Where is price? The last cross that we've seen, right, is the blue crossing below the 36 EMA. That qualifies for a what? Anyone? Ah. So in the event of no answer, for me, this is a downtrend, okay? All the qualities of a downtrend are seen over here, right? Price has now retraced back to what? 36 EMA, all right? Look at what we have. We have a doji right on top of that 36 EMA on a weekly. That is a huge, huge significant sign of don't think about anything than to sell, all right? Don't think about anything than to sell. So the sell-off is now in place, okay? And then what we want to see is a possibility of this sell-off now continue to go down, all right, if possible. But we can see that last week, we have some bullish correction of that significant sell-off, right? Bullish correction of that significant sell-off. Let's now x-ray this down by looking into daily to see precisely what has been happening, okay? We will be good to find a sell trade because the trend is down, all right? But for us to find that, we have to go and look at the chart and see what kind of opportunity and where the sell-off or the huge supply level that is fresh is coming from. You can agree with me. You can agree with me that over here, we have some supply and demand going on in this zone, okay? In this zone, you can see the buyers and sellers, you can see the little range, okay? And then you can see our price sell off from there. So that's a huge, huge supply zone right there. All right. So that would have been an area for us to consider for price to move back to, for us to see price coming all the way back down. All right. And we haven't come back to this area from the time that price sell off. All right. Couple of times before, you have to agree with me that price has come all the way down to this particular region before, okay, which can now give us a reason to say that should we consider another supply zone a little bit higher. But we look into a much more smaller time frame to see what is going on. All right, so let's look into our 4-hour chart. So looking into 4-hour chart, what's the first thing that we want to do is we want to see whether we have a trend line break. So we have a high there, lower high, all right? And this is the way the trend is going down, all right? And then we are looking for possible break of this particular trend line if price is ever going to go up. But we are not closer to that trend line at all. We are not close to the trend line at all. All right. So the other thing is, if this price decides to move up, then this trend line might be that restriction for price to continue to move up. We have a huge zone over here, right? And then the amount of distance between that is about 49 pips. All right, 49 pips and what of stop. But looking at this zone, you can see that when price is coming down below it, we didn't see that huge sell-off the way that we see it in the Aussie dollar. All right, once this initial sell-off occurs, we have a retracement back to this level, which shows us that the supply and demand zone has been retested, okay, such that when price is coming back to this level, it's not as fresh as that zone that we find on Aussie dollar. All right, so it does not mean that the sell orders that push price down to this level might still not be there. There will still be some over there possibly, but price will have to be the key thing that will show us that. And the other thing is, the moment price is going to this area, right, to this zone, and this trend line will eventually now have to be broken. All right, and once this trend line is broken, remember that will be switching the dynamics into a what? Into a buying opportunity rather than a selling opportunity. So we're going to have some serious buyers that will be pushing price up to this level. It's a key level, all right? It's not just as fresh level as it can be, okay? It's not just fresh. So what we can do is we can look to the left and look for a fresh level. And this is how you'll be qualifying the quality of the trades that you will be taking. All right? So when we continue to look to the left, right? So we want to see something above this level. So which is this area again, price shoots up higher, all right? I like the type of move that I like to consider as well is what we call the rally base drop. Okay, that's high probability for me, and or drop base rally. Okay, so I mean, consider this to give me a high probability trade, because that will really show me the shifts in the demand and supply. So you can agree with me that on this particular level that we are looking at, we kind of see a significant rally, a significant push up to the level, okay? And then we kind of slow down, all right, in this area, all right? And then we transfer back into the hands of the sellers, and we continue to push price all the way down, okay? So this shows a shift in what? In momentum, such that it's the buyers that push price up to here, and this is where the sell orders is waiting for them to push price down. Now look back. That is rally base drop, okay? If we have a scenario whereby we break this trend line, that will now continue to increase the momentum push, okay? The momentum push can push back into here and push back into here and push back into this area of what? Where we have the rally base drop and supply exceeds demand again, all right? So this particular little zone is the freshest level that we haven't seen since April as well, all right? We haven't seen that level since April, and that's why, that's where price starts to sell off. So that's where price starts to sell off. All right. So we are anticipating, if we ever have the break of this trend line, it will give more strength to euro, and then that can be the rally that we are looking for, that will push price up to a particular zone where we are looking for that sell off. And so this can be an area for us to be considering. Before we consider that area, let's look into our 1 hour chart going into that zone, okay, and see how price really get transferred over there. Okay, you can see when we have this huge push up, right? Price did not move swiftly away from this zone. Price tend to struggle. We have the sell-off, some buy, sell-off, buy, sell-off, buy. All right, so we can't see that huge imbalance seriously, all right, on this 1 hour chart. But over here, look at the way price move up to here and then the huge significant sell-off just occur. All right, so price can just, the amount of time that price spend in this supply and demand zone, right, is very small. We spend about 2 hours, right? In this zone, we spend a couple of hours before we eventually start to sell off. So the amount of time, how long did we spend in the zone, in the supply and demand zone, goes a long way as well. So let me check this area forward. Okay. If I check this area forward and see where we are currently, this is where we are, and this is the area where we are talking about. We're talking about this particular area here. All right, so that might be a huge area for us going forward, just the way price dropped from that zone. But we've come back to that zone before, we've tested it, and then you can see when we test the zone, all right, the way that we transfer and that sell-off occur back in that zone. So this can be a zone for us to, because a couple of things are coming up together, it can be a zone for us to consider. But if we are considering this zone, what kind of stop are we going to have? All right, so our stop will definitely be above here, which is going to be around 19 to 20 pips plus another 3 pips, let's say about 23 pips. Are we going to get a 5-to-1 risk reward ratio? The first place where price is going to come into will be this zone, and that's giving us about 67 pips. So that is just about what? 20, that's just about 3-to-1 risk reward ratio. So when you are now picking the quality of your trade, easily you can now say to yourself, all right, this one is 3-to-1, 3-to-1 risk reward ratio, reward risk, or whatever you want to call it. Are you following me? I hope you are following me. And then that 3-to-1 risk reward ratio would have occurred after you see the break of this trend line, which can give more strength to the price of euro, right? And price continue to shift up higher into this zone. And because we've broken the trend line, we might not get that good stop. It's still 3-to-1. This is the trade that we found on this one. So we can look for another opportunity and say to ourselves, maybe we can be looking for our price to shift back to this area, right? And when we get back to this area, that can give us a much more better risk reward ratio. So we have 2 zones in the euro that we might be considering, depends on what happened around each of the zones. So we have the zone of 114.26 for a sell-off, for a short trade, and we have this zone, another short trade before then at 113.79 zone. All right. But yeah, it's 3-to-1, so we might look for a much more better quality trade. So let's go into GBP USD. So we've seen the kind of opportunity that Aussie is offering us, and then the kind of opportunity that Euro is offering us, and then obviously we are building quality into that trades that we are looking at. So let's look at the weekly. Would anybody Would anybody be able to tell me what kind of trend that we are on this? Number one. And number two, is there anything spectacular about this zone as well? All right. So the particular trend that I'm seeing in the pound dollar on this weekly chart is what? It's a downtrend. All right. We are below the 200. We've got the last cross, which is over here, which is even the blue cross and below the 36. Okay. But what we can see to the left side of the chart is we can see a demand and supply zone over here where we have the sellers and the buyers fighting in this zone before the buyers overcome and shift price forward. But we've come back to test that zone again the first time, we've come back almost the second time, the third time, all right? And then now this is the fourth time again, and it's still proving so magnetic for price. To be giving price a little bit of a push up higher, all right? So you can see that the buying that's coming into the pound is coming in on a bigger time frame, okay? Not only that, we saw the sell-off back into a demand zone, okay? The two big mistakes that traders make. Bukola, are you there? What are the two big mistakes that traders make? If you are there, Pips and Candle. And anyone else, what are the two big mistakes that a retail trader makes? What is the reason why the banks are good at this business more than the retail traders? You start to understand that selling into a demand zone. Okay, so we have a demand zone here, right? And then a retail trader will be selling all the way down into here. So you want to know who you are actually buying from, okay? You want to know who you're actually buying from. You want to know whether you are buying from someone that has a very strong hand that can push price down, or you are buying from a very weak hand that you can take the trade, that you can take his account away from him and transfer his money back into yours. So you are selling into a what? A demand zone, okay? That's number one mistake, as or buying into a supply zone, as stated by Bukola over there. What is the second mistake? What is the second mistake? So you are late into this. A retail trader, we do what? We now start to sell after a drop. All right. I want to bring a little bit of clarity into this for you, and it can be a little secret between us, right? If we can refer to it as that. Say, for example, I don't know where we are all from, probably Nigeria, England, G billions. I want you to give me the name of a big supermarket or a big company in your location, each and every now of us over here. I want to bring a little bit of clarity into trading for you. Give me the name of any big shopping mall. So Wumi said Asda, so definitely Wumi is in England. What part of England are you, Wumi? Manchester, Asda. So I've got the Manchester Gulls competing in the room. Pips and Candle, I believe you are from Manchester as well. MBC, Asda. No, where is MBC? Where is MBC? Right. So the question is this. The question is this. If you ever want to buy anything in this life, right? In Asda, let's assume Asda, I think Asda sells things like not just vegetable. I think they sell electronics. Um, I'm not sure if they sell fridge, but what's the most expensive thing in Asda? All right, let's say a bag of rice. I believe everybody eats rice or everybody loves rice, whatever the case may be. Let's say about a bag of rice, and we are looking at a 20-kilo bag of rice in Asda, right? The same rice, the same quality, 20-kilo bag of rice. You go into Asda. Normally, you buy that 20-kilo bag of rice for £22 or £18, okay? You suddenly go into Asda, you saw it for £5. And you're looking at it, the same quality of rice that I normally buy, you know, there's no difference. The same thing that I buy for £22. Now I'm seeing it for £5. Tell me, what are you going to do if you can see such a discount in price like that? All right? What are you going to do? Are you going to look at yourself and say to yourself that £5 before it's £20? Are you going to say this is fake? Are you going to say this is right? Straightforward. Wumi said, I'll buy 4 bags. Straightforward. You're going to buy 4 bags because you are buying from where? You are buying, number one, at a very cheap price. You are buying with the perception of looking at the people that are selling this, that it's more or less like something is wrong. Let me grab this opportunity. You are buying from a weaker hand because for somebody to reduce the price of something to that low, right? They are in some kind of trouble that they need to dispose it. Okay, so if the price is coming down, you've seen a significant fall in price, okay? After seeing a significant fall in price, that significant fall in price is now coming into a technical level which you understand quite fully well. The reason why that level works is because there are orders imbalance in this place. There are more buy orders imbalance in this zone that push the price back up very rapidly. If it is more sell orders that's in this zone, the price is definitely going to come down significantly like that, the same way that I went up. All right. So what I'm now saying is the price is now cheap, but because you've seen the trend going down and you are the lover of trend anyway, just everything that the trading book shows you that, yeah, be a lover of trend if the trend is, and that's why most people get confused and want to run mad, and we have also different kind of crazy traders in the market because the understanding of what price is and how order flow works together is not well taught. You know, it's not everybody that will understand that if you have not actually sit at a trading desk in a bank and see the quantities of orders that's coming in when price move up like this, such that if price comes back down to that zone, those orders may still be there. If it's a fresh zone, then there's every possibility that those orders are there. All right. But this week I've shown us now that after that significant drop, a lot of traders want to continue to be a seller. Those traders that are selling into this, they are retreated traders. They are weaker hand, right? They are weaker hand that selling cheap products. It's already fall. There's a fall, significant fall in price. You know what I mean? And then a stronger hand can easily take away their orders from them. And then people will be like, yeah, it's a stop hunt. They've gone for stop and this and that. Stop deceiving yourself, right? They come up with all sorts of different kind of excuse to give something that is so challenging, right? The only reason why they start to talk about stop hunts and all these challenges is because they are not even seeing the others. Because trust me, if I give you the opportunity to know that at certain price level, you have 1 billion sellers, right? And in that 1 billion sellers level, the amount of 1 billion sellers, you know, the amount of buyers that you have, right? That's going to buy that 1 billion orders is just 1 million. Consider this. Consider this now. Where is my? So 1 billion sellers at 1.25 Okay. Let's say 1 billion buyers. If you can see this in the market or know where they are. Okay, 1 billion buyers at 1.25, and we only have 1 million sellers at 1.2500. Okay, if you have access to this information, all right, and you can see 1 billion buyers in this zone, okay, against 1 million sellers in this zone, all right, how would you know? Look at here. Before this price move up, right, you can agree with me that there's possible more buyers. That's the reason why price move up, okay, than more sellers, all right. That's the reason why price move up. The buyers literally overcome the sellers. You can agree with me on that, all right. And not just only that, such that when this 1 billion buyers comes in into the hand of this 1 million sellers, what are they going to do? They're going to purchase everything that this 1 million sellers have, all right. And after they purchase everything that this 1 million sellers have, remember quite fully well that they buy everything. There's nothing more to buy. All right. So they will be looking for more to buy because there is about 1 billion buyers. You've got about a lot more. Yeah, almost 900 million, whatever, more buyers than this million sellers. They'll be looking to buy as much as possible again from any available price because they don't want to miss the opportunity, especially knowing that this is a zone whereby now the others has overcome. So if someone comes in with anything at 1.2520, they will buy it. 1.2530, they will buy it. 1.2540, they will buy it. 1.29, they will buy it. They carry on buying because there are more of them in this market than the available sellers producing sell opportunity at a particular price level. All right. So when we are now coming into this same zone where we've seen that kind of a possibility whereby usually the buyers are always more than the sellers in this particular area, and a retail trader just believes that the trend is down, I'm going to sell through this, and price will continue to move down, and all the indication is there. What do you think is going to happen? That belief is the belief that we blow an account. That belief is the belief of not having the necessary education that you need to understand what goes on behind the others, what you cannot see. You know, you just sit down on your computer screen and you are just interacting with buying and selling, and you are just doing also different kind of magic in as much as it can produce profit. But where is your frigging trade location? You know, where is your trade location and what's happening in that trade location, right? You can talk about support and resistance and all sorts of different kind of technicalities, but how clearly do you believe in it, such that once you get to those zones, you are just executing and executing. All right. Look at the sellers. They push into this zone. All right. Straightforward, things change around. Some people are still thinking we are in a downtrend. Are we just in a downtrend? But we are in an order zone where we've got congested orders. We've tested it so many times. All right. That will make this area to become weak, such that maybe the reward that we might be looking for might not give us a strong push higher. Maybe, and it can lead into a significant rise or back in price where we are currently in the palm. All right, so we are in a demand zone on weekly, despite the fact that the trend is down. So we have to respect that, okay? And the respect that we're going to have towards that is to be looking to be a buyer, all right? Now, remember, we've come back into the zone 3 days into the zone, and then the buying opportunity has started coming, all right? But now, the trend is down. Buying has started to take place. Where are we pushing into? So on the short term, What is the trend in the pound dollar? Up or down? Even on the, what is the trend on the euro, on the pound dollar? Up or down? Any answer? Please give me 2 minutes. I'm just going to ease myself. All right. Price goes up, no break of structure yet. Euro US dollar and pound US dollar actually moves together. Nope, they don't move together. They are just don't have that kind of mentality. Please always check your charts, okay? Always check your charts. Although they are all denominated with dollar, but that doesn't mean that they move together. Everything moves according to the economical situation and political situation of each and every country. You know, just because we are in the same geographical region, you may say that we exhibit slightly bit of the same character, but yeah, they don't usually move together. If Brexit is killing Britain, exactly, if Brexit is killing Britain and it doesn't have no effect in Europe, Britain will suffer some decline on a day when euro is moving up. All right, but euro, US dollar, and US dollar Swiss, or Swiss US dollar, you can say they move together in slightly in a way. Well, contrary to what we've been taught on Forex basic, contrary to what perspective you've been seeing it, you can interpret it in many forms. I'll always endeavor to show you what is right based on order flow. Yeah. All right, going forward. So we can see that we having a push, okay? And this particular push that we are seeing is based on the demand that's coming in from which zone? From the demand zone, the longer term demand zone, all right? So that's why we are seeing that push. But that push, we are anticipating that if we are in a downtrend, all right, we will be looking at 36 EMA around that zone for possible retracement. Sometimes price can go above it. But have it as a guide going forward, all right? So we have a trend line. Price can be pushing towards here, right? And price can be pushing towards that particular trend line. But when we get to we will get to one before the other, definitely. And the one that we will get to before the other, right, is going to be this 36 EMA, okay? Such that if price is going down like this, from here, right, we went all the way down to there, all right? We make this lower high, okay? We come all the way down to here, all right? We make this lower low and make another lower high, all right? And we come all the way down to here, right? And then we are now pushing up. And this push up can give us what? What kind of a trend are we exhibiting based on this? This can give us what? Another lower high for price to continue to go down at that at 60 EMA. It's a scenario, it's a possibility that we can watch for, right? In this trending down market, all right? Another thing that we can watch for is markets always exhibit also different kind of cycles. So we can be looking for a 5-wave cycle, 0 to 1, 1 to 2, and the 2 to 3 is always the longest leg, all right? Such that we now have 3 to 4, okay? And then we now have possible 4 to 5, and the 4 to 5 can now start to give us a trend up, okay? Such that we'll be looking for possible, let me take this down. We can see the push to this 36 EMA because we've completed the 5-wave cycle. We can see the push to this 36 EMA from this wave 5 that can give us another 0 to A to this 36 EMA, right? A to what? A to B, all right? And then that B will be pushing us to what? To this particular trend line. Those are the kind of possibilities that we can be seeing coming into the pound, anticipating what kind of future that we can see. So we still expect this price to push up all the way up to 36 EMA around that particular location, where we're going to be looking for possible rejection that will push price back down, all right? That can continue this trend down or bounce off just because we've completed a fifth wave market cycle, all right? And then price can start to look a little bit up there. So bear that in mind going forward, all right? So what do we do from here? Now, if we are going to be anticipating things in the direction of the trend, which is to target this A level, right? We need to look for an area of supply, a key area of supply that can give us a very good high probability trade, all right? And as you can see from here, you can see how price is fighting in this supply and demand range that we have over here, somewhere around there, all right? That gives us up to that high, all right? And then we saw price, the sellers managed to do what? They managed to win this particular scenario, and the supply exceed demand that push us back into a demand zone. And we are now taking that demand zone to take us back into another supply zone. And that's how the market cycle itself up and down, such that when you have a lost trade, say for example, you can find yourself back in a winning trade, and if you don't take it off immediately, you see end up back in a loss trade. So you be encountering those kind of cycle based on the possible demand and supply that is occurring in the market. So if we look at this on a 4-hour time frame now, okay. So looking at this on a 4-hour time frame, remember part of the training that we've had, the break of 4-hour trend line, part of the rules, okay, part of the rules, 4-hour trend line break, all right, break of the trend line. If we have that 4-hour trend line break, all right, then we now start to be looking for what? A possible push up higher, because now we are seeing the 12 cross above the 36 EME to start pushing things to the upside, okay? That can now aid our trade that will be pushed back into another supply zone. So the actual supply zone that we are seeing in this particular scenario will be, we can look at this and say that this is how price falls down, even this particular small region, right? So this is now going to be increasing the possible odd of our trade. If we are looking at this region, we have this gradual sell-off. It started from there, okay? Price hasn't gone back to this area. It's a fresh level, okay? It's a fresh supply zone, all right? Yeah, price hasn't, we traded well back above all the zone, all right? When we are here, the last time was this particular rejection, which we say over there. Okay, that one is there. So if we draw a horizontal line of this zone, and that being the high, okay, and then we're looking for possible stop to be above here. A stop can be looking to be something like this, above that spike, 128.14, 28.12 region. A stop can be looking to go above that zone. And we're looking for price to push itself all the way back into this possible level if we get there, if we ever get there. But if we don't get there, another cool area will be this area, all right? And then that area is now tallying with our 200-day moving averages, okay? And then that will definitely going to get here before we get to this zone. All right, so looking at all these technicalities that you can call this area an area of support that eventually got broken, but it's not as such of a very strong supply zone to me. All right, although we have some technicalities that's coming up that can aid that trade for a sell-off. So we look into that as well. All right, so if we're looking into this zone, we know what our entry will be below here. You don't really want price to go deep into this zone. If this zone is a very key supply zone, you want to see that the sellers are coming in such that by the time price is getting to this particular area here, the sell-off have started. All right, so that may not happen in this first buy scenario. That may start to happen when price has retraced down and bounce off right from this zone and start to go back up to this buy scenario. All right, so that's another thing that we need to bear in mind going forward. I hope it's making a little bit of sense, or if it's making a lot more sense. All right, so we are considering a couple of locations when it comes to pound against the US dollar. And because of the nature of Brexit as well, we'll be considering this small area first of all right? We can tally another thing quickly into things by making sure that we look for the Fib retracement of that. So the Fib retracement of this is taking us back to 61.8% retracement. All right. price drops all the way down, and then we are looking at 61.8% retracement when price comes back to this supply zone here. So that can be very magnetic for price, okay? And then we can see price move back to 88.6 as well, just because we are traveling down from that demand zone. That demand zone can be very powerful to continue to push in price all the way up. Let's bear all that in mind for now. The actual trade that I will be looking at, that might be much of a high probability for me, okay, will be the sell-off from this particular location here. All right, the sell-off from that particular location, that will be tallying to a couple of other things. It will be tallying to that trend line, okay. It will be tallying to the possible A to B, B to C relationship, if that is the kind of pattern that we're gonna see. All right, so that second push up higher can be so significant for me going forward, and I might be looking at that particular trade. And if I'm looking at that, the kind of targets that I'll be seeing in this scenario will be this targets. So if I'm looking at this sell-off, right, and this is how you start to build patience to know that, okay, my setup hasn't occurred, I don't have to kill myself, I'll be bouncing away from that zone. My stop in this scenario will be around 41 pips, all right, a little bit more than that, six pips worth of stop, say for example, right. I'll be looking for price to push all the way back into demand zone. If price breaks back into this trend line, then it's much more good for me. At the back of about 66 pips worth of stop, we're seeing about 200, 66, 120. We're seeing a little bit over 2-to-1 risk reward ratio. If price move back inside this trend line, then we can be looking for possible almost another 5-to-1 risk reward ratio. It's a possibility in this particular trade if we are bouncing off this trend line. So we can be looking at a 5-to-1 risk reward ratio for that trade. And we know the time that we are looking for it to occur, not on the first buy push that's going to encounter its own resistance. You can take this trade as well, right? But you can take this trade as well that's going to sell up to this level. I'm coming, let me put 5-to-1 here. 5-to-1. All right. Okay. And then obviously if price continues to push up higher, let's look at this. The problem of this one is that's another 62. You can see about 70 pips worth of risk again. All right. And then obviously you are targeting coming back down to here. There's nothing too technical, about 120, 200. So you can see there is a lot of reward if we can be patient to see us coming back to this level. There's going to be much more better reward if we are patient on the sell trades that we're going to take in the pound. That's going to lead into taking trades in the direction of the what? In the direction of the major trend. Okay. For now, this particular scenario that we are having over here, if we're seeing a break of that 4-hour trend line, right, then possibly that's going to be what is going to lead us to push into this supply zone. But it's not a very good quality one. That's just the key issue with this. So I don't like the quality of trade on the pound dollar compared to the quality of trade that we've seen on the Aussie dollar. Is there any other charts that you would like to look at? So going forward, I would prefer to be patient on the pound dollar trades to wait for this scenario, all right? And then we can see that you sell off. And this scenario can be representing that particular harmonic pattern as well. if possible. It can be representing an harmonic pattern that will give us this retracement back to 78.6 or so, yeah, 78.6 or even 88.6. We'll be looking at a Gatling pattern around there, and we have our trend line over there. So we're looking at a Gatling pattern that can overextend itself to 88.6. Gatling pattern. All right, and that might be what is going on in the formation currently. For now, there's nothing. I'm looking at this 4-hour chart and looking for possible thing again to strengthening our entry. Put that to there. Put that to there. Put that to there. There's a shark pattern information. A shark or cipher pattern that can push price up to 78.6, which is still going to be above that trend. Push price up to 78.6, which is still going to be above that trend. So that is not, that wouldn't follow for now. As a longer term that we'll be looking at if this continues higher like that. Okay, so to keep the chart clean, let me hide that. Yeah, the pound scenario is a waiting scenario. I'll look into, somebody want me to check New Zealand USD. All right. What chart is that? All right, so I'll look into another dollar pair, New Zealand USD. And then straightforward, we look into weekly to see where we are on demand and supply curve. All right. So the trend in this scenario is down as well. Okay. But we cannot be at a particular zone where price tend to push up. All right. We have a supply and demand zone over here that push price up, but eventually get overcome by that sell-off where we find supply and demand zone again, and then price push up to this 36 EMA. We've gone into 36 EMA, that's where we are bouncing off, okay? So we might possibly be bouncing off that zone now for in continuation to the downside, possibly. But let's look into data. I like this. Let me quickly look for something. So for that 4 hour, spinning torn at the high of 78.6. First test, second test, third test. Sure. Start to come back into this supply zone. Trouble is looming for the New Zealand USD. All right. So what I'm seeing over here is a lovely trade that's likely going to develop from this 78.6 sweet spot, okay? And then anticipation of price to sell off. All right. Why do I like this setup? I like this setup. If price starts to come back, look at this zone. And you see that supply and demand equilibrium first of all, yeah, and then the imbalance that follows after, which is the sell-off, okay? If I'm too technical, please do let me know. Then we're looking at that. We're looking at that as well. All right, price comes in, blow above that particular zone, okay? Couldn't hold above it or close above it, spinning tops. If we start to see sell-off coming in and price start to break down below here, I'm not going to hesitate being a seller, all right? There's a huge rise in price, okay? I don't want to be buying after a significant rise in price in a what? In a supply zone, all right? So I don't want to be buying after a significant rise in price in the supply zone. I want to be looking for possible reason for me to sell this, okay, and push price all the way back down, all right? And then what if this happens like a magic? If the trades work out, if we start to see breakdown below 66.83, all right? There's a lot of fighting that's going to happen. But what I love about this kind of a trade is in terms of structure, I've seen that we've tested this side the first time, okay? We've tested the second time, which we failed, okay? And then we go back again after failing. Look at this. We went up. I want you to, can anybody analyze this chart for me the way that I'm saying it? Because when you look at your charts, you can quickly see opportunities, and I want you to be able to see as well. And straightforward, as soon as I see this chart, I was looking at a significant opportunity, and that opportunity we will still review it again going into the new week. And if you want to make a killer trade, right, and you want to make some decent thousands of pounds, right, I'm looking at this trade right now. That's the high, that's the lower high over there, all right? What is there? This is a low. The moment you break this low, that's structural failure, all right? So we break that, which means we fail the trend going up, right? In the best case scenario, you can see price pushing back into the zone, well, even above all this level, and start to get to 78.6 retracement level and start to find of discomfort, all right? And price will now take advantage to fall, okay? So structural break down, and if this price starts to crash down, we can start to see price coming back to this low, for example. I'm just saying. But before we get there, we have all this at 60 EMA, we have all this 200 EMA, but yeah, there's a sure banker that we can see this. Let's measure how many pips that is. I love this, such that coming into the session, that's about 122 pips, okay? 122 pips now, the stop will be about 34 pips or 36 pips. So that's about 4-to-1 risk-reward ratio. Not such a bad trade. Four to one RR, okay? If we start to sell from here the moment the market opens, all right? We want our stop to be just above this level, right? And then we're looking for price to first of all break down into this supply break, right? And then for things to come down. Let's look at things on a 1 hour time frame. Okay. The high, the low. What I like about this is this. Pay attention to this place so that you can start to see things clearly. Can you see this eye over here, right? Look at this eye. If we have strength, okay, if we have strength and the orders are not such a strong sell orders, all right? In this particular supply zone where price fall off, right? When price is coming back to that zone, if we have strength, we should be able to push higher above it, okay? But you can see that our high, which is over here, our lower high is lower than this high, an indication of downtrend, isn't it? The only problem that I'm looking at is we literally went to trade above this area, and now we start to see that particular sell-off in a supply zone as well. All right. So that's the reason why I'm saying I want my stop to be above here, at least if I'm going to be wrong with whatever is happening over here. But if I'm right, then I'll be anticipating price to come all the way down, 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 properly like that. Okay. And you can be using your trend line to monitor how the development occurs going forward into future. All right. So that when you have the break of this particular supply zone level at 6683, and then you have the break of this trend line double confirmation, there's no need for you to look back, take your shots, and then obviously enjoy the profits. Okay, so that is what we are looking for on this New Zealand dollar. We have the first technical level 6683. We have a break of this trend line that we can see as well, right? Such that when you start to see that break, you can switch to a smaller time frame to see whether you're going to get a retest of it or not. But yeah, that's an opportunity right there for a short New Zealand against the dollar going into the session. Okay, so that's for New Zealand USD. Looks like we can expect an equal measure move. Yeah, well, if you want to if you want to now go into targets, right? Just because what I'm teaching today is identification of this supply zone. If we want to go deeper into targets, we can put a little bit of more analysis into it and say that yeah, A to B, B to C, and we can be looking for targets in terms of if this is exactly where we're going to stop. So this is exactly where we're going to stop at that high over there. All right. This retracement is back to 78.6. We can be looking for target at 65.31. First target for an equal measure move. So this can be a huge longer term target on that particular swing trade. If if we get that swing, all right. So this can be an area for us to target. Okay. Thanks for bringing that up, Gibson. Let's look into this opportunity going forward into the future. The remittance for the New Zealand USD call. Right. So more into supply and demand, any other charts. So we've done Aussie USD, we've done Euro USD, we've done Pound USD, we've done New Zealand USD. Now let's look into some USD JPY. All right, let's keep it simple and nice. All right, so we look into the weekly. First of all, just give me one moment, please. I want to make a coffee. Right. So I want everyone now on this weekly charts. I want everybody to give me a fresh level of supply and demand um, on the 4 hour chart of this dollar yen, and a fresh level that you'll be considering for supply and a fresh level that you'll be considering for demand on this chart. What area would you look at on this chart and say, I believe you can have your chart in front of you as well. Let's see whether we are all gaining something. So obviously, I don't want to ask what is the trend. You can see retracement back to 36 area. It does not have to be exactly at 36. Yeah, it can go a little bit over it. But once you start to see the sell-off back into it, know that there's no two ways about that. All right, so I need a fresh level of supply, right, where you can consider to be a very good supply zone and a fresh level of a very good demand zone on this um, dollar yen. If you can send your chart to the Telegram chat group on the dollar yen, right, then I will take a look into it. I've got Eno, where are you from? Thank you for always sending a message to the Telegram room. I know you've asked for this training. I hope you benefit something. Jamin, where are you from as well? Nathaniel, thanks for staying tuned. Umar Duhati, my wonderful pips and candle, and Wumi as well. I think I'm just meeting Wumi for the first time. I'm not 100% sure. Umar Duat, I think I've seen that name before. Nathaniel, thank you for staying tuned. Let's do this quick assignment on the dollar yen. Let's compare and contrast, right? Because that's the only third time actually. Oh, interesting. You're welcome. On the dollar yen, let me see what your understanding is like. Okay, I guess it's much. I know you're the one doing that magical lady. Yeah, I know we say have a phone call to discuss about. Don't worry, we get time to talk. Yeah, let's look into this dollar yen. Let me see what we can. Let me see the kind of understanding we're having, and then as regard to and I want to see all charts in the Telegram group. I'll do my own as well. Yeah. And while I do my own, obviously, I will send it into the Telegram group. Probably, I'm not going to let you see me doing my. Just give me 2 minutes. Let me get my phone. So it's,
Because you didn't look properly.
well, if you say so. Right, so I'm gonna do my own level. Well, do it on your chart and send it into the chat group, into the Telegram chat group. Let's see it, because I want everybody to be able to do it, and then we can use it to start to help other traders as well. We have our risk reward placed on it, so that every trader that wants to take it can say they are taking it based on that risk reward ratio. Right, so the trend is down. The trade that will favor the most will be a sell trade, okay? But that sell trade wouldn't occur until we clear this demand zone. All right, so that's the demand level for me, where price is actually hitting just now, just because of the way we move away from that particular zone. So my analysis for this going forward, a fresh demand zone is right here, which we're just coming back into. Looking at that area. Someone might find a different one. It's not a problem in as much as it's valid. And we understand the rules. All right, so which means our stop is just going to be in between there. So here, about 30 pips worth of stop, okay? Our target for a demand trade, which is counter trend, right? We'll be looking to the upside, which is going to be at the next area of supply and at the next area of supply. So I can see another zone here. This slight little zone in between it will be what I might be considering, about 62 pips. And then that's about almost 2 to 1 risk reward. But I really want to take a 2 to 1 risk reward. That will be another thing that will be negating me from taking the buy trade. I'm just saying, for example. Then I want to look for a possible supply level. All right, for a possible supply level, which will now be in the direction of the trend. Okay, but bear in mind, if I look at this, it's a trend line from there to there. First touch, second touch, we've broken this trend line as well, which is giving that sell-off a huge, strong momentum to the downside. Okay, a fresh supply zone will be if we get a bounce back to this level, right? We might be looking for an opportunity that will come all the way down here for support, right? Just before you hit another demand level, you want to take your profits, right? And such that when price starts to come down here, if you're not even taking your profits, you move your stop loss to break even because price can be turning up and down inside the zone like that. You can have that zigzag balancing up and down, all right? But yeah, a fresh supply zone on this daily chart will be this. You can see that significant drop is nice and smooth and sweet, okay? And then obviously this will be a stop. I can decide to make this red, so black, red. All right, and then we won't be having a real stop into this until another fresh demand zone. We have another fresh demand zone down there. If we start to see price rising back up to that level, that would be a fresh supply zone for me. But if price starts to break down as a result of we have a supply zone here. A nice drop there. It's a good supply level. Price went back there again. We can see after the gap that fell off. Although this is the third time we are revisiting that level, right? It is not a good level anymore. And price was able to break above it to create another fresh supply zone from over here now, okay? So all the orders, all the sell orders that was here that push price down, the rest of it comes in at this particular level and push price down into a new level of demand. So we have a new level of demand over here. We are expecting that this fresh level of demand can possibly hold price to shoot price back up. If price shoots back up, because we are now aware that there's no more sell orders that cause the supply anymore around there, because price managed to move above it, our supply zone will now shift a little bit up higher, right? To create a new fresh supply zone right there. That's a fresh supply zone because all the sell orders that was over here, the rest of it got filled over here. And then this is a new fresh supply zone. If I look into a 4-hour chart, so these are 4-hour charts. What we can see at the back of this 4-hour chart now is we've got a trend line break, all right? A retest of that trend line and prices start to look down. So the next guidance trend line for us would have been this one, all right, which is closer to price. And this is the trend line that we are expecting that price is likely going to follow to start to go all the way down. Okay, so on this particular 4-hour chart, we can see trend line break, retest of that trend line. We are now bouncing at a demand zone, which can push price up higher, all right? Price being pushed up higher will be hitting this trend line, and at the break or at the bounce of this trend line, price can start to go back all the way down, or else if price comes back to this supply zone here. So we are looking at this supply zone now for a next possible area for price to go to. All right. So over here, price tried to retrace itself back to that level. All right. The supply was so significant and serious, we couldn't even get into the level before we see this sell off. If we get another push, we know that this area into all this area are good area of supply. All right. So we'll be watching closely this area going forward, but we can't get to this area until we break this 4-hour trend line, which might be creating a lot of situations for us. So currently, we are below the 200-day moving average. Okay, the sellers are stronger than the buyers. we have broken the trend line to retest it back, showing us the huge momentum. So eventually we're still anticipating, even if price start to do zigzag inside there for now. Yeah, inside there for now, we're still anticipating possible breakdown of the zone all the way down. All right. So our trade in the direction of the trend break, okay, is we are anticipating a slight push up higher. And bear me a second, please. So sorry about that. Just a quick phone call. Right. So going forward, uh, the there's a little zone here too. All right. Let's look at that on 1 hour chart. So we have a nice drop away from this zone. Okay. Um, it would have been possibly this one here. So the more you go down to a smaller time frame, the more you see the opportunities clearly. Price shoots up, right? We get that sell off, that decent supply. Okay. We went back there to pick up some more orders. We've retested that zone, okay, which is not making us much of a fresh zone. The more fresher zone will now be this one that we are considering, which is this. And price move away from that zone gradually. Okay. Just because we've come back to test that area, it's not fresh anymore. You can see when we sell off, we come back to test it, so it's not fresh anymore. The most freshest level will be this level here. This supply and demand that's taking place and price breaks down. You can shift it up deeper into there, or you can consider this week as well. All right, and then you're looking for price to move all the way back up, and you know definitely when you're moving back up to that zone, that's a 4 hour trend line. That's another trend line zone that can aid price from coming back down. The only issue is that trend line has been tested how many times now? So And that's exactly what I'll be um, letting you understand about how fresh a level is. Is it a fresh level? The same thing you will see on the trend line. The more a trend line is tested, the more that trend line can be broken. Okay. So this particular trend line was tested right there, tested over there, that huge supply. Come back here to get tested again, that huge supply, right? And then now price is likely going to be pushing back up to this supply zone, and we have this trend line there. If we push up, there's possible reasons for us to have a possible sell-off over here, okay? And all these are all the areas whereby you can start to use your Fibonacci to measure, because you now have the key data points to measure that, okay, if price starts to move up higher, there's every possibility that we come back to 61.8, which is closer to our supply zone over there, and then 78.6, which goes a little bit inside the supply zone, and that can be tallying with that particular trend line as well. So you have key zones that you can employ into your zones using your Fibonacci to find that key level. At the back of that impulsive move down, and price retrace all the way back up. All right. So all this is going to be giving you that patience, that you know which area you need to wait for price to get to before you make a decision. Okay. So we are looking for price to do a thing like this, and possible that. Okay. This shows at the area of around 108 level, 108.30 level, can be a very good area for us to consider another shots. All right, at the back of the dollar yen. So let's pay attention to that. I believe we've covered some details into this, and I believe the opportunities are clear. If you have any questions, do not hesitate to ask me. And then we have a stop, a target of about close to 50, a stop above there of 16. So 50 to 60, that's almost 3 to 1 risk reward ratio. 50 divided by 16. So almost 3 to 1 risk reward ratio we are looking at with this opportunity. All right, so far so good. As if we're coming back to this level. Okay. So I'm willing to call it a moment, a day now. I will expect also different kind of charts into the Telegram group. If you have any question, do not hesitate to ask. Thank you so much for your time. I believe you gain value out of this session. I believe it's bringing in a little bit of more clarity into the way that you consider your trades. Let's look into more charts, and obviously post anything that you find onto the charts group, right? I believe the strategy is simple enough. I believe you know the rules of STEM, and what you're going to be looking for. I'm going to copy and paste this one into the charts group so that you can copy it. You're welcome. Sorry. So that you can copy it and keep it as a checklist for yourself, and start using it to improve your risk reward. You know where your risk is going to be, and you know how to look for your reward. You know, those are the key essential things. And then now your entry is much more clearer. At the same time, combining a couple of technical tools together in the area of supply and demand zone. Okay. If you have any questions, do not hesitate to ask. But in the meantime, thank you so much for joining in. I do appreciate all your efforts into learning and understanding this. And I'll look to do a next call very soon in the near future. All right. Have a lovely night. You have all my contact details in case you need to contact me, and we take it from there. Okay. Thank you. I'll be ending the meeting now.